March 4th, 2025. Something to keep in mind coming into the day is that, well, first off, you have to keep your risk small in these days, right? These are ginormous days that we're having, which is always interesting, I think. 130 point day, volatility is increasing. But the thing to keep in mind is that we're relatively oversold, right? If you zoom out a little bit, this was a bear trend. This was a trend line break, and then this lower low was a retest. So you also have to keep in mind that this rally from 75 to 79 is still going to have some influence over the market. It's true that the bear move down to here is going to get a second leg, but it going below the bar 75 low probably qualifies as enough of the second leg. And any move further than that, like we got, is certainly plenty for a second leg. So I thought something to keep in mind was that 75 through 79 was likely to influence the market and keep us from having some sort of large bear trend day today. Um, bar five, does bar five need a second leg? 3, 4, 5? It might, but you have to keep in mind we're on the open, and when you're on the open, second legs can often be, relatively brief, and you can have violent reversals. I also, again, thought we were oversold. So I thought if you're going to be selling down here, it was best to scalp. 11, 12, and 13, I thought was a really strong rally, and I thought there was a really good chance that that ended up getting a second leg sideways to up. I did buy the close of 13. The reason I thought it was so likely that we'd get a second leg up is because, first off, we sold off, 80 points on the open. And we sold off 80 points in 10 bars. So what are the odds we sell off 700 points today? It's not very high, right? The most likely scenario is that we're going to start to go sideways relatively soon. And I thought 11, 12, and 13 were reasonable. You could buy the close of 11, 12, or 12. You could wait for 12, or you could buy the close of 13. I bought the close of 13. I scaled in more here. I scaled in more here, and then I exited the whole thing over here. I also bought the close of 45, and I scaled in more here, and I scaled in more here, and then I exited, I believe it was around the high of 54, somewhere in this area. It was a leg two measured move of 43, 44, and 45. Okay, so it was somewhere in this. I know it didn't quite get to it when I exited, so it was somewhere around the high of 54. So those are the only two trades I had on the day. I did decently well. But 11, 12, and 13 has all of the signs of strength of a breakout, according to Ali's white paper, a 3-bar micro channel. I'm trying to work on personally trading a little bit smaller when I'm buying the close, especially against a tight channel down. The move from 1 to 10 is probably still going to have influence over the market. So buying the close of 13, I know it's not going to go straight up. So I should probably skip out on the buy the close bar 13 and just focus on the scale-ins for that particular trade. The more you think you're going to get a trend, the more you can buy closes. And the more you think it's probably a leg in a trading range, the more you should be willing to just take the scale in. So I bought the close here a little bit larger than I did here, because here I thought that we were going to get a deep pullback. And here I wasn't necessarily expecting a deep pullback, but we ended up getting one, and I just scaled in on it anyways, because it's very unlikely that we're going to fall too far below the 43 low if we even get there. But 11, 12, 13 has a high probability of getting a second leg up, meaning there's a high probability that we get at least one tick above the bar 13 high. So traders buying any of these closes and scaling in know there's a high probability we're going to get somewhere up here. They also know that this sell-off down to the bar 11 low, or you could argue the 10 low, but the 11 low is the reversal point. So you know that we might have to test this bar 11 low, and we might even have to fall a little bit below it. So buying the close of 13 with a stop below 13 is not a good idea. You would have to have a wider stop. So you could buy the close, scale in. We get 3 pushes: 1, pull back; 2, pull back; 3 pushes down, and a large reversal up. And then we get a 4th leg down. I think 21 also needs a second leg. So we have this that needs a second leg: 11, 12, 13. The odds that just 15 is the second leg and retest this close, very low probability that you only get 1 bar in your direction. Much higher probability that you get at least a couple of bars in your direction rallying above the bar 13 high. So I thought that even if we did pull back, we would get a second leg up above the 13 high. So 3 legs down: 1, 2, 3, and a large reversal up. I thought the reversal up needed a second leg, and I thought the bears were on their final leg down. So I thought it was logical to be buying more in this area. As I said, I had scaled in already over here and over here, so I didn't end up buying more below 21, but I ended up exiting the whole trade up above the 13 high. 20, does it sell off to 24 need a second leg? Maybe, but it's a 4th leg, right? So leg counting is where you have to keep things in mind and start making exceptions. This is a really, again, when you're oversold like this, as much as this does need a second leg, the sell off down to here is the second leg. as much as 22, 23, and 24, maybe only 50-50 chance, maybe 60% chance. I think I had 60%. Let me check. Or 24. I gave it a 60% chance that it needed a second leg. And so not really all that great to be selling the close down here. More likely that we're going to pull back and get at least above the bar 22 high. You could buy the close of 27 if you wanted to. I thought that was a better chance that that gets a second leg. Bulls might be a leg too. We should go at least one tick above this high. So traders buying for any reason. We end up getting another leg up to 36. I think, again, 36, this is the rally. It is leg two, right? You could argue it's leg one, pull back leg two, pull back leg three. It's a little difficult. I looked at it as leg one, pull back leg two, maybe leg three to 36. But I still thought it was very likely that we would get at least one tick above the 36 high. Since we've been always in long, the market is oversold the past couple of days. Again, another thing to keep in mind is we are a little bit oversold. And so I thought that traders could be buying on the way down or buying the close and scaling in, whichever works. And 43, 44, and 45, it is a late leg, right? It's three legs up, 1, 2, 3, or a fourth leg, 1, 2, 3, 4. However it is you'd like to count it, I can definitely see the logic behind the traders thinking this is a fourth leg up in a trading range and they don't want to be buying up here. But the thing to keep in mind, I thought it was possible that we went and tested the bar 79 close. Obviously, I did not hold my trade for that long, but I thought it was possible. Had I been holding, had I held, I would have exited below 60. I think it's logical to exit below 60, and there wasn't really a way that I wanted to re-enter. But you can buy this close because look at the distance of this. This is the best looking 3-bar micro channel of the day, 43, 44, and 45. I gave it 80 plus percent, 80, 85, whatever you want to call it, percent chance that we're going to get a second leg from that before we get a real, 150% pullback. So I bought more. I tried to buy more. I was willing to buy more down here if it went down here, but obviously it ended up turning around. 3-bar micro channel from 46, 47, 48, not worth selling. It's half the distance of 43, 44, and 45. So it's not good to short here. We're in a bull market. We've been rallying. You could argue it's a big trading range, but bulls have an advantage because we're just oversold. So this 46, 47, 48 sells off like 60% of the distance of the rally from 43, 44, and 45. And these bars are better than these bars, blatantly better. So, why would you sell 47, 48 when you get 43, 44, and 45? Because you know that those bars are probably going to get a second leg up. 51, I thought there was a high probability of a second leg up for that simply because I thought that we needed to go above the 45 high. And I thought there's a better than 60% chance when you get something like this, maybe close to, I would say there's a 70% chance when you get a rally like this from 42 to 45 with a very high probability of a second leg that you get a leg two measured move. So I was scaling in expecting to get a leg two measured move. And that's why my profit target was there because I thought, 70% chance in that situation that I got a leg two measured move. So traders can buy the close 49, 50. You have to be aware of the fact that if you're buying the close of 49 and 50, 46, 47, 48 still might need some sort of second leg. So it's possible that we come back down into this area, the 48 close, maybe even below 49. If we got back down here, I was going to try to buy more. It obviously did not let me, but traders buying this close are willing to scale in knowing that they have the protection of the rally to 45 needing a second leg, and they know that they're probably going to need a second leg as well. 53, 54, 55, another 3-bar micro channel, still should get a second leg up. It's a little bit of a later leg, but I think, if you're trading and you're under the impression that we're in a small pullback bull trend, which we were, you can buy these closes and expect us to just go higher. Do you exit below 60? I thought 60 and 61 might need a second leg. It's, you could argue the tail on 63 might have been the second leg. It's really tough, I think, to stay long below 60. If you do exit, you can do always in trading and buy again above 62, 63. But for me, I'm just going to get out below 60, and that would probably be it for me, at least, had I been holding long. Again, if you're buying over here, it's a really, really late leg. What's your goal? The magnet is the bar 79 close from yesterday, and we rally straight up to it. So if you bought these closes, it's kind of difficult to buy more or be willing to hold long up here. And the thing is, when you start recognizing the 3-bar microchannels, which ones are strong and which ones are weak, you can look to fade on stop orders on the weak ones. So that 71 is pretty overbought. One of the things I mentioned, I don't know if I mentioned it in the 4-bar microchannel study, but it's something that I noticed a lot when I was trading it, is that the 4-bar microchannel is really, really, really bad at the end of bull trend days. So when you get a 4-bar microchannel after a long bull trend, the odds are that it's going to get something disappointing, some sort of disappointing reversal. That's exactly what happened here. And so I thought you could sell below 72 and that was credible. And this is another 80+% chance of getting a second leg down, which it did. It was probably a similar size. Yeah, there you go. So 70+% chance of getting the second leg, similar size. So whenever you see just a really, really impressive first leg, assume there's a 70% chance you're going to get a good looking leg too. And one of the reason why this, fails so much at the end of trend days, it's pretty simple. If you just look at, the reason I'm using a 20-minute chart is because I do talking about the 4-bar microchannel, but it's that, this doesn't display it very well. It's not showing what I want. Maybe a 10-minute chart. It's a big climactic bull bar on some time frame, right? I don't know which time frame that didn't do what I wanted it to do, but on some time frame, this is just a big climactic bull bar, and it's that climax bar that Al talks about at the end of trends being rather unreliable. And so that's why I assume that the 4-bar microchannel is really unreliable late in the trends. As far as trades that you could take on the day, you could sell 6. You could probably buy above 11, but we've had a 10-bar bear microchannel, so you have to be cautious. You can buy the closes and be willing to scale in, but you just have to understand what to expect. If you're buying up here, this is probably we're going to go a little lower from this. So you have to be willing to scale in lower. I wouldn't short too much in here. I think it's hard to sell, 17 maybe, but for a scalp, you could buy the close 27, 28, 29, expecting at least another leg up. Buy the close 35, 36, something like that, expecting another leg up. This probably the best trade on the day. You buy, you just scale in, you're going higher. 49, 50, 51, you can buy these closes. I would not sell anything in here. These are better buy the close bars than sell the close bars. And then you can buy the closes 53, 54, 55. I would probably get out below 60. And if you're trading always in, you can buy again 62, 63. And I would probably just exit all of it below 72 if I was long anything. Realistically, I would exit everything at 79 close because that's the magnet for the bulls. But you can also just exit below 72. The daily chart. The daily chart. So maybe 3 legs down, right? 1, pull back, 2, pull back, 3. If you sold the close of this bar, yesterday's bar, the 3-3 bar on the daily chart, you were probably hoping for a better looking follow through bar. This is relatively disappointing. However, I think that this is the bottom of the trading range, right? So it's not going to be this low. It's going to be this low. So we could be in a trading range between 5,700 and 6,200 for quite some time. I think that obviously this channel gets a second leg down, but we could get a deep pullback. I think that the bulls who bought this high and scale in are going to make money with a wide stop. I don't think that we're going to continue that much further down if we do continue down, simply because I think if we were going to go a lot further down, like down to this area, 5,400, I think that this bar would have closed near its low. But instead, we got obviously a large rally today. So I don't really think it's all that great for the bears. And I think that they're starting to recognize that this is 3 legs down in the trading range. So I think most traders are expecting a bounce and then for us to go somewhat sideways. The weekly chart, looking good so far for the bears, but a lot of time left in the week. Bulls want this chart to get bought up as much as possible and turn into a disappointing close for the bears. And like I mentioned, the bears are hoping to close near its low and increase the chances that we get down to this 5,400 magnet or eventually 5,000. As I've mentioned a lot of times before, we're not done with 5,000. We didn't just go right through 5,000, test it once, and then we're going to leave it alone for the rest of the time. We're going to go back to 5,000. I don't know when, do we get to 6,200 before we go back to 5,000? Probably. I'd say it's pretty likely. But I think, do we get to 7,000 before we go to 5,000? I don't think so. But I could be wrong, but I don't think I'm wrong. I very much think I'm right that we're going back to 5,000 at some point. Let's say, 90% chance that we're going to get back to 5,000. Again, I don't know if probably not this year, maybe this year. I don't know. But, this year or next year, I would assume we're definitely going to get back into this area. And something else to consider, one of the reasons why, why I think we might go a little bit higher before we go lower is just look at the monthly chart. Is this a convincing sell signal bar to you if you shorted this close or you sold below this? Do you want to sell below this doji bar? What do you think to yourself if you sell below that doji bar? You're probably thinking to yourself, well, I just threw away money. And you probably did if you sold below that doji bar and you're holding, right? You're probably going to lose because it's a low probability trade. So what are the odds that selling below this bar, that we go somewhere down here before we just go up here? Not really all that great. This bar would need to get a lot bigger, a lot faster. So the bear's doing a good job, a couple trading days into the month, but over the course of the next week, they're going to have to make this bar convincingly large if they want this to be the start of the bear trend, because it's a doji bar, and that's really not a great way to start a bear trend. All right, that's going to be it for this video.